Welcome back. The Federal Reserve Board is meeting this week, Wednesday and Thursday, with potential for a big move. The board is expected to decide whether to raise interest rates for the first time since 2006. It would be the first rate hike since then, at a time when the stock market has been on a roller coaster ride and the economy has been moving at a snail's pace. So how should they proceed? Joining me right now is Tom Wilson. He is the CEO of Allstate Insurance. And Simon, it's good to have you on the program.
Nice to be here.
What kind of an impact would higher rates have on your business and on financial services, generally speaking?
Well, start with on our business. To the extent rates go up on a long-term basis, we'll make more money. But rates have moved up a lot in the last couple of years anyway. If you look at the 10-year bond rate, used to be at 150. Today it's at 2.2 and a quarter. So you're up 50% on long rates in a couple of years. So I think the Fed should just get out of the way.
So you think they should just raise rates and get out of the way?
Yeah, I think, the economy's ready to go. It's sort of like, when a kid's riding a bike and you've got to hold it and you've got to let go at some point and you hope they don't fall. Like, the economy's ready. Let go.
Well, I'm glad you said that you think that the economy's ready, because there is a bit of a debate with the price of oil plummeting, with the entire commodities complex plummeting, oil, iron ore, copper. All these things are supposed to be telltale signs that are basically suggesting things have slowed down quite a bit in the global economy because the commodities are industrial metals. How do you see it?
Well, I think the worldwide economy has slowed down, a lot driven by China, of course. But actually, with commodity prices going down, it gives the EU and other people more room to use monetary policy to lift them up because they're less worried about deflation. So in terms of the United States, we're in good shape. Like, I wouldn't worry about it.
Well, what about the fact that some of the shale companies are over-leveraged, and if, in fact, oil prices keep coming down, they're going to have to renew their credit facilities? That's another worry, that there are going to be job cuts in the oil sector. And that's really where we've been seeing the job creation. Yeah,
well, clearly the energy sector is under a lot of pressure this year. And we own, as you know, we have a $40 billion fixed income portfolio. We follow all those companies. The energy companies have gotten themselves a little bit over their skis. Yet it's just one sector of the U.S., okay, right? So the beauty of our economy is, oil's down, manufacturing's up. It's like we got services are up, so we're not concerned about it.
I want to ask you about your patents that you've recently received in terms of the connected car. You're going to have sensors all over the car that basically gives you a much better idea of how people are driving. Yeah. Not just the people in the car, but the people in surrounding cars. Tell us what you're doing with the connected car.
Well, first, there's all this new technology, sensors, you talk about GPS, telecommunications, and it helps us give a more accurate price to our customers. So when we're pricing your insurance, we're making an estimate of how often you'll have an accident. We do it on what kind of car you drive, how many accidents you have, your age. This gives us very specific information. And when we ask our customers, if we can give you a discount, would you do this? Almost all the time they hit the bid. 60% of people get lower prices.
Yeah, because you have so much more information that you could actually dictate the pricing. But some of the worry out there is that it's like spying. I mean, you will also be able to. You'll be able to know if there's alcohol in the air, if someone was drinking, right, yes, behind the wheel. You'll be able to know how many people are in the car. You'll be able to hear their voices. You can have. Where does this information go? Are you going to sell people's data?
We're going to use the data to give people a better experience. So we're not selling the data, but to the extent we could help you, for example, get a discount because you're driving by a place where they sell coffee and you can drive through and you've never driven through. Maybe we'll give you free coffee if you go through there. But the whole spy thing, it's like, look at your phone. I mean, like, the amount of location data connected through people's phones today, this is a fraction what we're talking about, what's already collected.
So what you're saying is the horse is left the stable. There's no privacy anyway.
Well, and it's about making your life better. So we're actually working on not only better pricing, but trying to make the driving experience better. So, for example, you could have a competition with your friends on who's a better driver.
How do you insure a driverless car?
Well, that would be insured by a commercial insurance policy. Okay. Driverless cars are going to come. I mean, this personal transportation industry is really inefficient. Average cost of a car is about $9,000 a year. Average household's got a couple of cars. Wow. So if you could cut that cost by a third, it's probably like a 10% pay increase for most households. It's going to come. It's just going to take a long time.
Wow, driverless cars. I want to be alive to see that one. Tom, good to have you on the program.
Nice to be here.
Thank you so much. Tom Wilson is the CEO of Allstate. A new report says Hillary Clinton's private email server was not wiped after all. meaning her emails may not have been deleted. But are they now gone forever? What it means as we look ahead on Sunday Morning Futures. Back in a minute.